Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me today on the floor of the New York Stock Exchange for our market briefing and also to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, happy Friday, and thank you for joining me.
Oh, great to be here. It's a beautiful day. It's a chilly fall day today.
It's very chilly.
I woke up this morning and I think it was about 40 degrees in the suburbs, which is enough to pull a sweatshirt on. First time I think I've done it in the season, and I'm sure it won't be the last. But it's October 11th, and today we're celebrating Brigadier General Casimir Pulaski Memorial Day. So most New Yorkers probably only know Pulaski from the Pulaski Bridge, which is this bridge that arcs high over the borough of Queens. But General Pulaski was actually a Polish immigrant, Revolutionary War general, and is known as the father of the American cavalry. And he was a great aid and help to George Washington. He died of his wounds this day in 1779. A great hero of the Polish Americans, and we'll remember him for this day. And it's not just the Pulaski Bridge.
Yeah, as you mentioned, here in New York City, people know of that bridge, but they might not know what that bridge is named after or who. And I'm glad you mentioned this little history nugget here, because here in the U.S. on Monday, it'll be Columbus Day, and you and we will be here because the stock market will be open, but bond markets will be closed. And outside of the New York Stock Exchange, they close Broadway down, and there's a street fair, and there's also a parade in New York City.
Yes, it's Columbus Day, and the kids are off from school. There's been a big movement to make it Indigenous Peoples Day, although it's sort of there's a movement that Columbus brought a lot of evil. Well, he was an explorer, right? If he didn't come, somebody else would have come. So I think that may be a little unfair, but certainly, when there are a lot of Italian Americans, they're very, very proud, and it will be Columbus Day. Certainly, I think, for the Italian American community, which is a big, vibrant community in New York City.
And looking at the stock markets on this Friday before we head into the weekend, so it's been so busy this week, hasn't it? In terms of events, economic data. We did get the release of PPI, which on an annual as well as monthly basis, it did come in slightly below expectations on the heels of consumer prices yesterday. But right now we are looking at the market higher, and we did see a mixed open today, especially as Tesla weighed on the NASDAQ, but right now we're seeing the NASDAQ in positive territory.
So PPI was interesting. The core was sort of bang on. The headline figure was a little softer, due in large part to energy. But if you look at the year-on-year figures, and generally I like month-on-month better because of my personal recency bias. It tells me what's happening recently. But the year-on-year figure on the core was 2.8. Up from I think a consensus of 2.6, and that was due to a higher revision to some of the previous months, which people haven't really looked at. And just like the other day when we saw the employment report, if you see higher revisions, that can be troubling. So and Jay Powell has said we like to look at year on year because it kind of cuts out the noise of the month-on-month. So this certainly, while the street is reading it as non-threatening, certainly bond markets liked it. The 2s, 10s spread is actually back out to 15 basis points now. It was down to 4 just earlier this week. So the markets like it. It's non-threatening, but there might be some hidden undercurrents that we won't see until we see more and more reports. But I think we're pretty much locked in at this stage at 25 basis points. Almost all the Fed speakers have said that, and with only one person, Raphael Bostic of Atlanta, who said I'd be okay with a pause, and he said that yesterday. But he stands out. So I think we're locked in for 25 basis points at the moment.
Yeah, and before we move away from the inflation data, so we got CPI yesterday, and today we got producer prices. And when it comes to the differences in terms of the readings, explain why producer prices is so important. And when we're talking about businesses or manufacturers pushing the costs of items and making consumers pay for it. How does that all work when it comes to inflation and producer prices?
So producer prices are kind of, you can think of it in a way as a trailer or a preview to CPI. That these are what the producers are paying. Sort of like think of it as an intermediate, intermediate goods, intermediate services that will eventually likely percolate its way up to the consumers, because if your costs are going up, you're probably not going to eat that. You're probably going to pass it along unless you have no pricing power. And what we've seen from inflation, CPI, certainly companies have had pricing power. They may have a little less now than they did maybe a year or two ago when we're coming out of the pandemic. There was a lot of helicopter money dropped in this country. So they could really raise prices and there's money to pay for it. But producer prices really are what is in the pipeline. So it may give us a clue to what's coming up next. And that's why this sort of jump in year on year has me, I want to watch this a little more closely. Higher revisions always make you it suggests a trend. Again, one reading, let's not get crazy or too excited about it, but worth keeping our eyes on.
And speaking of prices, we got the preliminary reading of the University of Michigan's Consumer Sentiment Index. So that came in below 70. What do you think is going on here?
I think and this is it's sort of consumer confidence, and longer term it's still good. But today all the stuff in the front was a little soft, and I think there's still concerns about high prices. Right, high prices is different generally than inflation. Inflation is the increase in prices, but prices are high, especially for food. Especially if you go to a fast food place, prices are much higher than they used to be, which is why McDonald's threw in a very, very popular $5 to $6 sort of special meal deal. I think they're getting a lot more traffic. We'll see the results in maybe a month's time or thereabouts when they report their fourth quarter earnings. Maybe a little bit more than that. But so that, and then I think some of the storm, this election, and I hate to tie everything back to the election, but a sinking consumer confidence doesn't usually bode well for the incumbent party.
Yeah, before we move away from the consumer, so you brought up fast food restaurants, and here in the U.S., whether we're talking about McDonald's or Starbucks or other fast food outlets, they have been trying to entice the customer to come back and offer deals. Right? And usually when we think about Happy Meals or other combo sets at fast food restaurants, we're thinking, oh, it's going to be quick, not so healthy, but cheap.
Right.
And if you think about how much inflation has affected these restaurants, right, here in the U.S., there are different regulations when it comes to labor laws and wage minimums. So that does affect the bottom line for these companies. But I was so surprised hearing about a McDonald's where you could get a Big Mac meal, but it was the highest in the country, over $18, right, for fries, burger, and a drink.
Right. You can't get French fries. You go to French fries, and I have kids, and I like McDonald's, in part because I know exactly what I'm going to get. It's going to taste exactly the same. It might not be the best. It's not Shake Shack, but it's quick and it's fast, and it's still relatively cost effective. But you remember pre-pandemic there was the dollar menu. You could nip in and get 4 nuggets for $1. You can't get anywhere close to that now. Part of it is labor costs have gone up so much. But one of the things that people have always argued against, sort of a higher minimum wage, is you're going to end up with potentially fewer jobs. And you walk into McDonald's now and you see automation. You see those kiosks, and those kiosks are great. There's one person maybe who's actually taking physical orders, but different languages. You punch it in, you see everything. No more waiting online 6, 7 deep, so fast. And you know what? I bet there are probably fewer jobs as this automation goes on, and you think about it, it's pretty popular.
Yeah, so no more deals like we used to have pre-pandemic when it comes to these restaurants. So whether we're talking about McDonald's, Burger King, other chains, it's quite a pricey meal.
They've had to bring it back, actually, because they were seeing foot traffic drop tremendously. So what's happening is they're saying, all right, we'll take some margins on the $5 meal deal, and hopefully they'll buy something else. Or a kid comes in for a Happy Meal, where my youngest is 14, and she still sometimes likes the toy. The French fries are literally this big.
Small,
They're
right?
tiny. So, you go in and get a $5 meal deal, and your kid wants a Happy Meal. That's where they're getting the margins. But you're seeing, I think, over the years, a lot more automation in many different places.
Yeah, and a company like Starbucks, they're trying to figure out how to bring customers back into their stores as well. I was pretty shocked, so I don't regularly go to Starbucks, but given that it's autumn, I did want to try a pumpkin spice latte. I do not consume dairy, so if you get the non-dairy option, it's an extra 75 cents or $1, depending on where you are in the country. So by the time all is said and done, it can be $7 at tax. It can be $8 for one drink. Right. So that's expensive.
It's a great drink, but $7 or $8 for like a fancy cup of
way
coffee
too pricey.
It's a lot.
It is. Yeah. So a lot to keep our eyes on, and inflation is definitely affecting consumers, but so are increases in wages as well when we're talking about the labor market.
And what we found is the people in maybe the lowest quintile, whatever you want to call it, have had their wages come up quite significantly, which is good, because it's expensive to live, certainly in this part of the country. But that has had the effect of lifting a lot of prices, and I think you find that wages in the middle to slightly middle upper portions haven't really moved, and people are feeling that inflation is really slowed down, but the prices have remained high and will remain so. We don't want deflation, but high prices are here to stay.
And Tai, before we move on to other topics, since we're talking about the consumer, we're talking about shopping in this country, the holiday season is fast approaching. After the election comes Thanksgiving, and that's when we start seeing deals at the stores. And I understand that you went to Sam's Club recently.
I did.
Tell us about your experience here.
My first Sam's Club experience yesterday. As a matter of fact, it was my son. He got a special on the Sam's Club membership, and you could put one additional person on. So he put me on, and I said, all right, let me go and have a look, because I'm a lover of Costco. And so I went in, got my membership card. People were really helpful, and I went in, and it's like Costco, but less. It's laid out like Costco, and it's really because Sam Walton went into a Costco with Saul Price, took a lot of pictures, and Saul knew he wanted to open something like that, and Saul didn't mind, since we know what, imitation is maybe the sincerest form of flattery. So it's very much like Costco, but it's not as well lit. One thing was, the signs were not as clear. Like, I look at Costco and I'm like, oh, I know what that costs, but Sam's Club, I have to sort of squint and read it a little bit.
Interesting.
But they have a $5 chicken. They have the $1.38 hot dog, which is cheaper than Costco. They have an icy, which my daughter is really excited about. They have, everything is like Costco, but sometimes just not laid out as well. But the one thing that surprised me, and I used it and was great, was they have this new thing called ScanNGo. And it's not at Costco. You take your phone, you download their app, you scan everything, and then at the end you pay and you walk right out. They'll check your cart right at the end, just like they do at Costco. But that's a lot faster. I'll tell you what, if I'm buying something really heavy, like I bought a watermelon yesterday, I don't really want to take the watermelon and like heave it over and scan it. So that's another sense of like what we just talked about, automation.
Yes.
Right? There are going to be, jobs that can be done, without a person are going to be done without a person, because it's faster, people are happier, and it's cheaper for the company.
And we know when it comes to automation, there are so many concerns about people being displaced by technology and automation, but at the same time, it can be convenient, whether we're trying to get through the line at a store, or we're at a fast food restaurant and we want that order ASAP, or even using certain apps. So
right, Easy Pass, right? That did cost a lot of union jobs. And the head of the ports, Daggett, was complaining about that.
Yeah.
But you know how much faster are we driving through without having to pay the toll physically?
Yeah, personally, I've noticed when using these apps, there's less confusion if you're, say, adjusting an order or you're trying to get a specific item made a certain way, then there's less confusion sometimes when you're interacting with an app versus a human. So
it's a lot more efficient.
Yeah, and one thing that's interesting about Sam's Club is apparently outside of Dallas, Texas, they're going to be having a scan checkout at every checkout register. So these registers will be unmanned. So just based on your experience, do you think that was a smooth process when you went through one of these new checkouts?
It was really, for me, it was very, very smooth. I mean, I had a little problem with the code on the watermelon, had to scan it a few times, but otherwise, like, no more long lines. Let's just go. So what you do is you maybe have one person on staff standing near the exit, helping people who are having trouble with the app. That's always going to happen, right? But instead of having, maybe 4 or 5 cashiers, you'll have 1 or 2 just kind of, making sure everything works. And again, customers are happier, it's more efficient, and your costs go down. So, once you made that initial investment, and of course you have to keep the systems going, I mean, I think it does work out, and it's sort of the trend away from having humans do everything.
Yeah, and while we're talking about automation, I do quickly want to take a look at Tesla. So shares have been down this morning and initially had been weighing on the NASDAQ, dragging that index lower this morning. But of course, the robotaxi event took place yesterday. Many of us had watched it and had some mixed opinions. So what did you think of the event, Tai?
So I did watch it in its entirety, and I'll admit I haven't watched the previous ones in its entirety. I don't think he's the greatest showman. I mean, you want a showman, you probably need Donald Trump, right? But he's not the greatest showman. And what disappointed the market was the lack of specifics, which I think could be really tough to do because there's a lot of regulation. Are they going to allow Tesla to do these things? I mean, they allow Waymo, so I guess you want to go in there and attack the places where Waymo has already blazed the path, and Waymo is owned by, I believe, Alphabet. That's where you want to start, but there are really no real specifics other than it'll be eventually less than $30,000. The idea is great that you can basically rent out your car, right? But we just don't know when it's going to come. And then what was interesting to me was they had the robo van, which was cool, but they had Optimus, the robot, right? And he titled it "We Robot," which is a pie to Isaac Asimov, and I'm a big Asimov fan. There's a book called I, Robot. So he brought out these robots, which were pretty cool, and he said eventually you're all going to have one, and it's going to be like $30,000. And you would say it would take people a while to get used to that, but I think society, if we can get used to scan and go, eventually, Optimus, take out the trash. Optimus, put my kid to sleep. There's some possibilities in there. So, the man has unbelievable vision. The question is, the market is saying today that, we need a little more detail. Can you really deliver on it? So I think Musk is the most polarizing CEO of our generation. There are people who absolutely love him. There are people who can't stand him and think he's, a liar. A lot of those people have been carried out. But his involvement in politics recently certainly, has made him polarizing. There'll be people who are happy that Tesla's down a lot. I just don't like shorting that guy. I think the stock probably has a little more room on the downside. But shorting guys with vision, I don't really. Long term, I don't really want to be in that camp.
Yeah, and speaking of vision, Tai, when you think about a company such as Tesla and the fact that this event that happened yesterday, they named it the robotaxi event, and as you mentioned, we saw this massive production when it came to this announcement, but the critics who were not so happy with what came out of it, as you mentioned, regulation, lack of a timeline, safety, and when we think about concerns about privacy and data when you're interacting with a robot such as Optimus, it might make sense, but it does seem as though he's trying to move Tesla away from just EVs here and focus on technology as well.
Yeah, I think part of the reason is I think he likes the next big thing. I think he just wants to go to Mars. A lot of people think he just wants to go to Mars, right? But the EV market is getting a little saturated. I think the people who want it have it. The people who are not sure about it, myself, are probably not going to get it anytime soon. And you're reaching a sort of a maturation area where he wants to go after the next new thing.
Yeah, absolutely. So other names that we have been watching this morning, in addition to Tesla, include banks, right?
Yes.
Banks earnings season has kicked off. We saw early signs this morning. JP Morgan and Wells Fargo reporting profit declines from a year earlier, but less than analysts had feared.
Right.
And we saw even in the pre-market that shares of both companies were higher, but given that we're in this trajectory for the Federal Reserve, the central bank here in the U.S., to continue gradually easing rates, what do you make of what we saw, and what can we expect as we head into the rest of earnings season here?
So both, the last time I looked just before we went on air, I think JP Morgan was up sort of 4%. Wells might have been up the same or a little bit more. A big surprise for JP Morgan was the net interest income was up for the quarter. And for all of 2024, they're now looking at $92.5 billion versus $91 billion expected. And remember about a month ago when the president, Daniel Pinto of JP Morgan, said, your NII figures for 2025 are totally out of whack. It's unrealistic. And the stock dropped by 4%. But so this was kind of a really pleasant surprise. So maybe rate cuts, and we just got it, so we won't really see the impact until the next quarter's earnings.
Yeah.
But maybe the banks will do just fine, as the Fed cuts rates, and the gap between their deposits and where they actually lend money, at least the big banks can figure out how to keep that gap, the net interest income, which is at the end of the day what the banks, it's a big piece of their bread and butter, the blocking and tackling. That's where you get a lot of your money, because your investment banking revenue, your trading revenue, your underwriting revenue, that can always change. But that sort of buffer is where your banks make their money, and they've both done well. Now we've got some other banks coming out, the Morgan Stanleys of the world, Goldman Sachs, and they don't have a lot of NII, if any. So that is really a sense of how the financials are doing overall, and we'll get that next week. But this is certainly, the banks are up well on this, and I think it'll probably carry us to another nice day in terms of where the market is. Where is the market now?
Let's do a quick market check here. So as Tai mentioned, we are seeing JP Morgan higher, and that's why we're seeing extensive gains for the Dow Jones Industrial Average. JP Morgan shares are up by 5% in this morning hour. We're seeing the Dow Jones Industrial Average up by triple digits. So here we are at the 11:30 mark, nearly at the 11:30 mark. We're seeing the majors all higher by triple digits for the Dow. And as for the NASDAQ, we're seeing it higher by 0.2%.
Yeah.
Earlier we saw it in negative territory, but it is managing to hold above the flat line right now. And the S&P 500 is up by 0.5% right now, or over 30 points, and we're right around the 5810 level.
Yeah, I think the markets are going to have a good day. Tesla's a little bit of a drag on the Nasdaq in certain small sectors, but I think the mood is today in the market seems to be relatively positive. And we're running short on time, but a couple of things I just wanted to touch on. Gold has had a tremendous rally over the last couple of days. Looks like it might actually end the week flat or slightly up. Which is just it's a bull market, and it was 26.04 the low the other day. I think it's over 26.50 now. I don't like to mess with a bull market. It always makes and I think I'm not really big enough. The last thing I do want to touch on was I was surprised to see late afternoon, early evening yesterday, crude had jumped sharply.
Yes.
And I went immediately to all my news to see if there had been an attack. There hasn't yet been. Yeah. And what's interesting is the Iranians had made a really, I think, smart announcement. They told all the Gulf Arab states, who are not their friends, remember, they're Shiite and the Gulf Arabs are all Sunni, that if you let Israel use your airspace to attack us, we cannot guarantee your safety. That's pretty smart. That's saying, listen, we don't make it harder for them. We don't want you to like help them attack us. And you wonder almost if the Israelis have waited so long because they've gotten a lot of pressure from the Biden administration to say, we don't want to hit on the nuclear facilities. We don't want to hit on the oil. We just don't want anything to happen in the next 3 weeks into the election, which is why they've waited so long. But you get a sense that it is probably coming.
And Tai, that is one area we will definitely be keeping our eyes on, and that is politics as well as geopolitics, especially as we edge closer to November 5th, the presidential election. Hard to believe that we are fast approaching that date, but Tai, as always, thank you so much for joining me here, and have a great weekend.
Great to be here. Same to you.
Thank you so much, Tai. And coming up next, I will be joined by Dan Ha, partner at Karani Asset Management. Don't go away. We'll be right back.